Welcome to the deep dive. Today, we're tearing open the latest from an industry titan, Omnicom.
Yeah, a big one.
We're going beyond just the numbers, really, to uncover not just their financial health, but also how they're making these, well, monumental moves in the market.
And the AI piece, that's huge.
Exactly, and crucially, how they're wielding artificial intelligence to, redefine marketing itself.
hmm
Our mission today is pretty straightforward. Strip away the jargon, get you the essential insights.
Straight from the source, the earnings calls, financial
Right.
reports.
So get ready because there's a lot to dig into here. And frankly, what Omnicom is doing with AI, it feels like it's genuinely redefining the playing field.
It really does. And what's fascinating here, I think, is that even in what's still a pretty uncertain market, Omnicom's second quarter performance for 2025 was remarkably solid.
Solid. How so?
Well, their organic growth for the quarter was a robust 3%. It's right in line with their expectations.
Okay. 3% organic.
Yeah, and hitting near the midpoint of their annual guidance, actually.
And the numbers back that up, right? I saw their non-GAAP adjusted net income per share.
Increased, yeah, by 5.1% to $2.05 compared to last year.
Which, put simply, means their core profit, after adjusting for certain one-off things, saw pretty healthy growth.
Exactly. And their non-GAAP adjusted EBITDA margin held flat at 15.3% for the quarter.
Flat is good here, right? Shows stability.
It does. It indicates their operating profitability before certain non-cash expenses like depreciation remained remarkably stable. This really signals confidence, I think, in their financial position. Their cash flow continues to strongly support key uses like, well, dividends, strategic acquisitions, and share repurchases.
And speaking of share repurchases, they're actually putting their money where their mouth is there.
They are. Used $223 million in cash for buybacks in the first half of 2025.
Okay, and they're on track for what, like $600 million for the whole year?
That's the plan, yeah. $600 million total for the full year.
So the guidance they're giving for the full year 2025, that still holds them, despite everything.
Absolutely. They're maintaining their full year 2025 guidance. For organic growth, they're projecting it between 2.5% to 4.5%.
Okay.
And an adjusted EBITDA margin expected to be about 10 basis points higher.
So a tiny bump, but significant. 0.1% increase over last year's 15.5% margin.
Exactly. And the CEO commented that the macro environment hasn't really shifted much since April.
Wow, interesting.
Yeah, I mean, there are some client issues related to proposed tariffs, that kind of thing.
Sure.
But generally, it seems to be business as usual for their major long-term clients. They anticipate clarity from Washington to help things settle down in the second half.
Okay. So with that strong financial foundation laid, Omnicom isn't just stable, they're making this, well, strategic power play. It feels like it could redraw the entire industry map.
You mean the Interpublic acquisition?
Yeah, their monumental acquisition of Interpublic. This isn't just about growth, is it? It's about reshaping the competitive landscape itself.
It absolutely is. And it's a major milestone they just hit. In June, Omnicom received antitrust approval to close the transaction in the U.S.
Okay, the U.S. approval is in.
Yeah, that brings the total approved jurisdictions to 13 out of the 18 required.
So, still a few more to go.
A few more, but they remain fully on track, they say, to complete the transaction in the second half of this year.
Right.
And what's particularly striking, I think, is that the response from clients and employees has apparently been overwhelmingly positive.
That's crucial, isn't it?
It is. There's a genuine sense of anticipation, it seems, for the opportunities the combined company will create.
Yeah, that positive reception makes a difference. The merger is designed to combine complementary strengths, right? Essentially giving the new Omnicom, well, every tool in the shed.
To accelerate growth, get even better client results, and, boost returns for investors.
And has it been a distraction? There was some speculation.
Apparently not. They say the transaction hasn't distracted their professional staff. Agencies are fully focused on client service, new business.
Any examples?
Yeah, they've had recent wins like Under Armour, Bimbo Global, and ASDA.
Okay, so business continues.
And beyond that, they seem highly confident in achieving their synergy target.
The $750 million run rate target.
That's the one, post-closing.
Yeah.
That's, $750 million in annual cost savings or increased revenue once they're fully integrated.
That's a big number.
It is. And they're even actively identifying further opportunities beyond that goal.
It's fascinating because one of the CEOs pointed out something interesting,
Oh, yeah.
that in this competitive set, only two companies consistently win big. And these are the two they actually tried to merge with a decade ago.
Wow, really? I didn't realize that.
Yeah. So this isn't just about market dominance today. It highlights a really long-term vision, consolidating power, efficiency in what's become a super fragmented digital landscape.
Right.
It's positioning Omnicom not just as a leader, but maybe as a potential architect of the future industry structure. It feels like a calculated bet on scale and deep integration that, frankly, few others can match right now.
And underpinning all of this strategic direction, Omnicom is making an even more significant move, I think, in how they leverage data and AI.
Okay, let's talk about that.
So, effective July 1st, they reorganized their most advanced data and technology assets. Think of things like Omni.
Their consumer understanding tool?
Right. And Omni AI, their AI lab. Artbot, their creative engine. And the Flywheel Commerce Cloud for e-commerce.
Right.
They've pulled all of these into a single, unified, end-to-end platform organization.
And they brought in a big hitter to lead this new platform group, right? Duncan Painter?
They did. Duncan Painter.
Yeah.
He brings extensive experience building tech platforms, Flywheel, EDS, Experience, Sky.
So that shows a serious commitment to this new structure. They're not messing around.
Exactly. And what's truly impactful here is how the proposed acquisition of IPG will significantly enhance this new platform.
How so? What does IPG bring to the tech table?
Well, it adds Kineso and Axiom, which are recognized as the world's highest fidelity data platform.
Okay, high fidelity data.
And Real ID, described as the most comprehensive customer identity solution available. So better data, better identity understanding.
Which feeds into their whole philosophy.
Exactly. Their long-standing strategy is rooted in the belief that data and technology supercharge creativity.
And with generative AI booming.
Breakthrough creativity is more valuable than ever, they argue.
And that belief seems to be paying off already, doesn't it? I saw the awards.
It does. OMD Worldwide won Media Network of the Year.
Mhm.
DDB Worldwide won Network of the Year at Cannes this year.
Impressive.
Plus, Omnicom was named the most effective holding company for the second year running by the 2024 FE Index.
So the industry is noticing. It's clear they're getting recognition for this pivot.
It really shows a clear commitment, leveraging advanced tech not just for, efficiency gain.
Right, not just cutting costs.
No, but as a core differentiator that fundamentally enhances their creative output and ultimately client value.
Now this next development, this feels really groundbreaking. Omnicom made a strategic call way back in 2022.
To be an early adopter of generative AI, ahead of the curve.
Recognizing its transformative potential ahead of many competitors, even clients. Now, early applications focused on ideation, content creation, immediate productivity gains.
Standard stuff, initially.
But the latest phase involves the aggressive rollout of their agentic framework. This isn't just single AI tools anymore, is it?
No, it's different. It's about deploying multiple specialized AI agents that actually collaborate seamlessly.
Like a team of AI experts.
Kind of, yeah.
Yeah.
Each handling a different part of the campaign, lifecycle crunching data, optimizing strategy, refining creative, working together.
And this capability is powered by Omnicom's own stuff, right? Their proprietary data assets, their institutional knowledge.
Exactly. Democratizing access to their industry-leading consumer intelligence behaviors, demographics, cultural insights, transactions, all that good stuff.
Mm-hmm.
And they're also fine-tuning market-leading foundational models to essentially encode their strategic expertise. They're teaching the AI their winning formulas.
And we're already seeing real-world examples of this agentic framework in action.
We are. For strategy and creative teams, they're using synthetic audience agents, basically AI versions of target consumers, grounded in their Omni datasets.
To do what?
To conduct synthetic focus groups for ideation, personalized content creation, even pre-launch testing and scoring of campaigns.
Wow. Think about how fast that makes a market testing.
Exactly. And their health group developed a multi-agent reasoning engine. It recalibrates campaigns and assets much, much faster when market conditions change.
Simulating scenario.
Simulating market scenarios,
Yeah.
stakeholder responses, yeah. And their digital commerce group crafted numerous agents to help with new product launches.
How?
By surfacing actionable insights from sales trends, market data, competitor analysis, you name it.
So this represents, well, far more than operational efficiency, as they put it.
Absolutely. It's about building truly differentiated capabilities through their data and tech stack. It strengthens their long-term competitive position. It's a fundamental shift in how work gets done and really how value is created.
And this brings up a really fascinating anecdote one of the CEOs shared. It kind of grounds all this high-tech talk.
Oh, yeah. The cat hat story.
The cat hat story, exactly. About an ad they created in minutes with AI featuring an animal with a hat.
And legal flagged it immediately.
Because it's illegal to put a hat on a cat. It's funny, but it perfectly illustrates why, even with incredible AI,
You still need the human element.
the human element is irreplaceable. Expertise, legal oversight, ethical boundaries. It's the critical guardrail on this whole innovation highway.
Absolutely.
And it also highlights a significant shift, right? Because of this increased productivity from AI, compensation models are changing
Moving away from just billing hours.
towards focusing on outcomes defined directly by the client.
Yeah, which raises a really important question, doesn't it? How will these advancements in AI redefine what consumers even expect?
And how will brands adapt to deliver these hyper-personalized experiences?
Because it's crucial to understand, AI isn't just about creating the same content for cheaper.
Right, it's not just cost-cutting.
No, it's about creating more personalized content, driving true mass personalization at scale. That's the goal,
And any cost savings.
expected to be reinvested by clients into brand protection or sales-driving tactics.
Yeah.
Because if you can prove a strong ROI,
You encourage more spending. Makes sense.
and that shift toward outcome-based compensation, it highlights a fundamental change in how value creation is seen in this industry.
Okay, so while AI is accelerating things, it's not all smooth sailing across the board, is it? It's like watching a chess game unfold.
Yeah.
Some pieces move strongly, others face pressure.
Yeah, Omnicom's business definitely saw mixed performance across different disciplines.
Where was the strength?
Strong growth in media and advertising, up 8%, especially their media business. And precision marketing was up 5%.
Okay, media and precision looking good, but there were challenges.
There were. Observed in public relations, down 9%. Healthcare was down 5%. And branding and retail commerce was down a significant 17%.
Any specific reason for healthcare?
Yeah, impacted by a prior period client loss, apparently, and also some brands nearing patent expiration.
Ah, okay. It really shows how adaptable Omnicom has to be navigating these different currents.
And geographic variations played a big role, too, in the quarter.
Right. Where did things look good?
The U.S. and Asia-Pacific both posted solid organic growth. Continental Europe showed pretty mixed results depending on the market.
And the UK?
The UK, however, experienced a decline of 2.5%. Strength in media and advertising there was unfortunately offset by, well, weaker performance in other disciplines.
And what about creative versus media overall?
Their creative business was flat to slightly down in the quarter. Macro uncertainty seems to have a bigger impact there.
Why is that?
It's just easier to shift creative spend quarter to quarter compared to longer-term media commitments, you know?
Right, more flexible budgets.
Exactly. Also, a key addition to the team back in May was Susan Catalano.
The new chief people officer in the U.S.
Yeah, just play a vital role, presumably in integrating Omnicom and Interpublic, building that world-class HR organization they'll need.
Definitely a key role with that merger looming. So, looking ahead, this brings up a question. How does an organization this massive, so reliant on global client spending,
Maintain such a steadfast outlook amidst all the geopolitical and economic uncertainty?
yeah, how do they do it?
Well, their ability to adapt their cost structure seems key.
Mm.
And focusing on those long-term client relationships.
Mm-hmm.
While those macroeconomic concerns persist, they're largely seen, internally at least, as controlled by political decisions like the tariffs from Washington you mentioned.
Which they expect to settle down.
They expect things to settle down over the balance of the year. The company really emphasizes its flexibility, its agility in adjusting to conditions. That's crucial for managing these external pressures.
And what about those share repurchases we talked about earlier, the $600 million target?
Yeah, it turns out that current target for 2025 was actually kind of an arbitrary figure.
Arbitrary.
It was set as part of the merger agreement with Interpublic, which effectively limited their activity in the market.
Ah, okay. So the merger deal capped their buybacks.
Pretty much.
Yeah.
The CEO indicated that without that agreement, they'd likely be a lot more active in the market, especially recognizing the current low valuation of their stock, in their view.
So they think their stock is undervalued right now.
Seems like it. They expect more flexibility, naturally, once the merger closes.
Makes sense. So overall, despite the headwinds,
The company remains confident in achieving its full-year organic growth and margin targets. They view any current uncertainties as temporary.
temporary bumps.
Yeah, with the expectation that, quote, everything should be upside from the bottom once greater clarity emerges in the market.
Okay, so quite a journey. We've covered Omnicom's robust Q2 financials, the huge strategic implications of the Interpublic acquisition.
And the really transformative power of their AI strategy in redefining marketing.
Absolutely. And this isn't just about corporate performance, is it? It's about the very future of how we interact with brands.
It really feels that way.
So here's something to think about. How could this shift to AI-driven mass personalization at scale fundamentally change your everyday experience? I mean, if brands can now create limitless, hyper-tailored content just for you, how might that impact not just what you buy, but how you perceive advertising itself, maybe even reality?
Blurring the lines between information and influence.
Exactly. It feels like this is just the beginning of how these technologies will reshape our world. So what questions does this deep dive raise for you?